I think it's safe to say that the landscape for the financial markets has changed drastically in the last few weeks. Why is that? What's going on? And what is to come? Well, here's the thing. The first thing we want to talk about here today is the dollar index, which has broken through these highs, but not only has it broken through the highs, it's now forming higher lows, and market structure here seems to be pointed in the upwards direction. But why is that? What's the driving force? We talk about this frequently on the channel. We don't just focus purely on price action. We do use price action, but we incorporate the fundamental story. Well, it starts when we take a look at the yields world. Now, if you're not interested in bonds, just stick with me. If you're a currency trader, you trade gold or indices, this drastically matters to you, or it should if you're a fundamentalist. Yields are up. What that's telling you is that the bond market thinks that they require more on their yield to buy bonds right now, and that is arguably for a couple different reasons. One, you could say, well, the economy is looking really strong out of the US, and that strong economy could lead to higher elevated levels of inflation for some time. The other thing is you could say, well, the government has $1 bajillion of debt and that just rises and rises, and so there's an added risk to buying treasuries. That being said, how does this matter to you if you're a currency trader, or you look at gold, or you look at stocks or oil or whatever? How does this matter to you? Well, it's drastically important. The dollar index is up quite a bit relative to this, because not only do we see yields going up, but we also see other currencies struggling. If you take a look at the euro, for example, you can see the euro's down big on the daily chart. Take a look at the pound, same thing. While we are starting to see a little bit of a bounce, in my personal opinion, I think pullbacks on these markets look like selling opportunities simply because US data has shown some strong outperformance. So the yields market is telling you something. The yields market is telling you that the bond market thinks interest rate cuts may not be coming as quickly as everybody thought. We heard from Jerome Powell yesterday, and he said some pretty hawkish stuff. Basically, he leaned in on the idea that inflation has shown some stubbornness and is not seeing the same kinds of progress that it was. And so, he mentioned in that Washington, D.C. Event yesterday that there's a possibility that they may need to remain at current levels for longer than previously expected. So of course, in that regard, the stock market doesn't love it, especially more sensitive areas to interest rates, arguably the cyclicals like technology, real estate, consumer discretionary. This area of the stock market's not doing so hot. The NASDAQ has broken through a key level of support when looking at the daily chart, and while I am a bull on the NASDAQ overall, I'd like to see some form of higher low come back into this market before we move higher. Not only that, I'd also like to see it show up as a more bullish reading on the Edgefinder. Right now we get a +4 score when looking at economic data, technical readings, and sentiment readings like the commitment of traders data and retail positioning. We'll get into those in just a moment. But the NASDAQ, the S&P, and the Dow are no longer anywhere near the top for bullishness. Right now, I continue to have positions in a few select areas like US oil and silver, and I'm looking at other areas like copper, platinum, and pretty much exclusively bullishness on the dollar. In fact, for those of you guys who track the dollar closely, remember, you can always, if you have a copy of the Edgefinder, just go to this category section and major currency pairs, and then bam, now you've got all of the US dollar denominated things against other major currencies. You can see something pretty clear. The euro, the Aussie, the Kiwi, the pound, all of these things against the dollar are getting bearish readings. In fact, we are one reading off from getting strong or very bearish and very bullish readings on the dollar across the board. Why is this? Well, it's because economic data is shining bright in the US relative to its peers. I've been saying this for weeks now, and again, the dollar dominance continues to be the picture in front of us. So for me, how do you play that? Well, for me, what that means is I'm looking for opportunities to build pullback trades on the dollar index. It also keeps me a little bit cautious or cash heavy on some of the indices. I have sold some puts, and so I'm kind of working through that side of things in my trading as well. I've sold puts on XLK, XLY, etc. The US economy still looks really strong, and I could get into sectors here in just a little bit, but let's go back to this chart here. I want to show you some COT data. So here's another reading trading that is really important. When we take a look at gold and oil, you can still see that institutional money is very bullish on these areas of the market: the Nikkei, silver, the Dow, gold, oil. Then the institutional money is more piled in short on the Swiss franc, the CAD, the Australian dollar, the yen, and bonds. So when we look across the board, that is your net positioning. But what about in the latest filing? We can see in the latest week-to-week filing out of the Commitment of Traders data some interesting stuff. They actually bought the NASDAQ, which is really surprising to me. They also bought the US 30, they bought the euro, and they bought the dollar. Noticeably, in the currencies department, they really focused on USD and euro and pretty much sold everything else. If you look at the yen, the CAD, the pound, the Swiss franc, the Kiwi, these things got sold week over week in the Commitment of Traders data report that we look at on the Edgefinder. By the way, if you don't have a copy of the Edgefinder, currently there is a massive sale going on. We're doing 40% off for the month of April to celebrate 2 years since we launched this product. It is currently 40% off, but if you send us a direct message today using the first link that's down below in the description, you can actually get 45% off, which is the biggest discount that we do all year long. Now, when you click that link, it's going to take you to a place where you can chat directly with someone on our staff about getting a copy for that massive discount. The reason we do it this way is so that if you have any questions or you'd like to get to know the Edgefinder before you purchase it, we have dedicated representatives who will help you in that process. So please feel free to use that as a resource. If you have questions about how the tool functions, send us a DM using that first link in the description below, and do not miss the sale. I'm telling you, you will kick yourself if you look back a year from now and the price is up from where it is currently and you missed the big discount. So take advantage. Yes, that's a sales pitch, but it's a really good product for traders who are looking to incorporate fundamental analysis into their trading. Here's a quick look at retail positioning. We can see that retail traders are very much long on all of these different assets. That's why we're getting a red or contrarian sell signal. And then on the flip side, you've got a couple things where retail traders are very short and we're getting a contrarian bullish signal. Noticeably, dollar CAD and dollar yen. I'd like to look at dollar yen and see what's going on there. I listened to a friend of mine who went on CNBC, Kathy Lean. She spoke a little bit about the yen situation. I thought it was very insightful. She mentioned that the Bank of Japan is caught in a tough situation. It's trying to get the currency exchange rate down against the dollar. They don't like the yen being this cheap against the US dollar. For a number of reasons, but they've had this program where they're buying their own bonds aggressively to try to value their currency higher against the dollar, but they're fighting a wave of strong US economic data. And unfortunately for them, I think that story continues to play out the way it has for some time, with dollar dominance continuing to be this theme, especially with all of the recent data. You know, I'll show you just real quick. Let's do a rapid fire. Why is the dollar so strong? Check this out. The first thing I would point out is that if you take a look at manufacturing in the US, manufacturing PMIs show some expected growth in the area. In fact, 50.3 is the first time we're coming out of a manufacturing recession in the US. Take a look at retail sales numbers, which we got this week. If we zoom in over here, you can see something pretty cool. Retail sales, which is the consumer spending basically, came out hotter than expected. We also notably got some earnings reports from key companies involved in consumer spending, like Discover. You know, of course, any institution, bank, or company that is involved in consumer spending, like credit card companies and banks, can tell us a lot about the consumer. And it seems like the consumer is pretty strong. That's, again, another win for the dollar. A very obvious one is that the jobs data out of the United States has impressively continued to outperform expectations. The red dots are expected values. The blue bars are where we actually got in terms of the latest NFP data, which continues to surprise the market. Claims continue to be pretty solid for the jobs market in terms of unemployment claims. JOLTS job openings are slowing, but not rapidly. Unemployment rate continues to remain relatively low. In fact, this is a near like multi-decade low for unemployment. Wage growth is moderating, but still strong. Consumers are getting paid, they're employed, and while the grocery store is still high in prices, the reason prices continue to stay elevated partially is because people are employed and are getting raises and getting paid. So that's something to consider as well towards the consumer. And another key thing is when we take a look at US inflation in blue here, it's come down, it's gone sideways, but it has remained stubbornly above the Fed's 2% target. This could lead to higher interest rates staying the norm for longer, which of course, if you know anything about fundamentals, you know higher interest rates generally bullish for the currency. So for those of you who are watching gold, why hasn't the dollar brought this chart down, right? If the dollar is so strong, then why is gold up? Well, here's why, and I've said this many times, but people keep asking it to me, so I keep explaining it. The gold market is going up at the same time as the dollar, not because the dollar's purchasing power is just massively growing, but because other currencies are weakening much faster than the dollar. I would recommend that you watch yesterday's video if you want more explanation behind the dollar's strength. I'll leave that pinned in the top right hand of your screen right now on a card here on YouTube, so you can click that video if you want to watch more details there. The basic idea is that other currencies are deteriorating faster than the US dollar, and if that is the case, then what we see is relative dollar strength, right? It's kind of a weird thing. It's like, who's the best of the losers, I guess? Who's the least worst best, if that makes any sense? Yeah. Anyways, it's kind of confusing at first, but currencies are a confusing thing in general. That being said, the gold market continues to go up as well because of geopolitical tensions, and there's several other reasons that you could argue. You could say there's just a lot of uncertainty in the world. We also see that recent tick up in the VIX. This is also sort of a positive thing for gold, right? When you get uncertainty, the VIX usually spikes, volatility goes up. That's what the VIX is tracking, and that higher volatility environment could lead to people wanting to just go ahead and park their money in something like gold. I am actually long silver, however. This gold is not getting a positive reading on the Edgefinder, it's getting pretty neutral reading here, but silver has been a bullish read for me, and it's where I've actually picked up a position. So I'll show you my SLV ETF trade that I'm currently in. At this time, I am floating $821. If silver continues to push up, I will happily trail a stop and let this one become a bigger trade if it wants to be. If it doesn't, my stop loss is below the lows here, and I will respect that stop loss if it gets hit. If it gets hit, I'm wrong. If it does not, then we'll continue to let this one run. But it's starting out well. The other trade that's going, it's mixed for me, is oil. I'm continuing to hold oil here at this level of support. This is another Edgefinder call out here, and I liked the technical setup, so I went ahead and entered the trade. It's getting a +7 when looking at all the economic data. Again, all that strong economic data leads to demand for oil. At least that's how I am interpreting it here with the Edgefinder's economic data scoring algorithm. Again, if you're looking to get more involved with the fundamentals, don't try and do this off the top of your head. I did it for a long time. It was way too much work. Automating it using tools to scan data is the way and the future. And if you're not doing that, and all the hedge funds that you're trading against in the markets are doing that, you are at a severe disadvantage. You need a systematic approach in this modern day, in my personal opinion. You can't just be trading off the top of your head. And if you're doing that, you are destined to lose money. So here's a little side note to my sales pitch about our big sale that we're doing right now. It would be worth your investment to learn how to trade, to get equipped with the right tools, rather than just to blindly trade in the market and, you know, again, throw your trading account down the drain, essentially. With the right tools, the right education, and proper, preparation for the financial markets, and a good dose of risk management and, being psychologically disciplined, that's how you're going to set yourself up to be overall successful in making money from the markets rather than just losing it. So again, think of it as an investment. If you're thinking about getting this tool, don't miss out on the big sale. And again, that information is in the description below. All right, and in terms of updates on the option side of things, I did just sell calls against my new TLT position. So if you've been tracking the channel and you are interested in my options side, I've been doing more and more of this on the channel and in my own, trading / investing journey. I've been doing a lot of options trading, and overall it's been very good, but this recent position on TLT has been a struggle for me. So what happened here is I sold puts on TLT. Now, if you sell puts on TLT, what that tells the market is I am basically offering to buy shares of TLT, and I had a strike price of $93 a share. Today, the options buyer, whoever that is out there in the world who bought that put from me, they decided that they wanted to exercise their option. What that means is that they wanted to go ahead and close out their put position. And that means I have to buy the shares that I promised to buy at the price that I promised to buy them at $93 per share. However, if we go take a look at the positions, what you can see here is that with TLT, I now have 10 or 1,000 shares of TLT with an average share price of $91.93. And options traders, you already know where I'm going with this, but the reason it's lower than my strike price of 93 is because I collected premium, P for premium, right? So my premium was $1.07. So I actually got these shares discounted to me because I sold that put as a way to enter into this market. Now, of course, I'm floating a loss on this, but what I've done is I have 1,000 shares. I have now reversed and I'm selling calls on my TLT position. I've gone 1 month out. And so my new position here is that if price rises to $92 or above, I will be taken away from all of these shares for a profit. And I also collected 40 cents. Now that 40 cents might not sound like a lot. I didn't collect just 40 cents. It's 40 cents per share. So if you magnify that by 1,000 shares, $400 in premium. And if the market comes back, of course, I will make a slight profit on the shares that I own at $91.93. Hopefully this makes sense, but these are some updates for you on some of my options trades. Other areas of my options are going not so hot. Let's do this really quick. I'm just going to filter. And this is the first time, by the way, I've had just a string of wins on options. This is the first time that with my wheel strategy, I'm now getting assigned some shares and dealing with that scenario. So let me take out my silver and oil trades. These are all of my current options trades. I've got a covered calls going on FXI, covered calls going on a TLT, and several pending puts that I have sold on certain areas of the market that I like. VOO is the S&P 500, solar panels, XLV is healthcare, XLY is consumer discretionary, XLK is technology. If you'd like to learn more about this is available inside of our VIP Discord channel where you can see both my options trades that I'm sharing, as well as, of course, all of my momentum trades. So if I'm trading indices or if I'm trading commodities like oil and gold and silver, you can see all of these trades here shared inside of the Discord channel. There will be a link down below in the description if that's something you're interested in. Thank you guys very much for watching. Remember also, if you want to trade with this broker, there will be links down below in the description for Webull, but also other brokers if it's not applicable to you, if you can't trade with Webull. So all of those and special sign-up perks will be in the description. Thank you very much for watching. Trade safe. See you guys next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.